Hello students, how are you? I hope you are doing well. I hope you have watched the previous video on insurance claims, that is basic introduction to insurance claims. Now we continue our next lecture. How to calculate value of stock as on the date of file? That is a question. See, generally when we are having stock in our business means we as a business people maintain stock records. Stock records. Okay. So when stock records are maintained time to time, see, suppose in your business you are maintaining stock records time to time. Very good. But there are some businesses who don't maintain the stock records. See, suppose let us assume there is a small business, small shop. Generally, they don't maintain any stock records. If it is a big business, then they will maintain compulsorily stock records. Stock records. Now look at it. Stock records are not destroyed. See, fire happened. Generally, where do we keep all these stock records? In the business premises only. So in the business premises, stock fire occurred. Fire occurred. Okay. Along with the stock, if these are also, the records may be destroyed or the records may not be destroyed. Okay. Earlier days, we used to maintain all stock records in manually, but after some period of time we maintained the records in the computerized form, computers, and this data we saved in floppy disk. Did you remember floppy disk? At the same time, CD, compact disk. After that, these pen drives, memory cards, so many things. Okay, so what is the risk associated with this? Again, we may lost the data which is saved in the floppy disk or CD or pen drives or memory cards, or any virus happened to them. Nowadays, where do we store the data? In the clouds only. In the clouds. So when you store data in cloud system, there are from anywhere you can access the data. Yes or no? So all these things are in the previous day. Previous day means in the previous times we used to maintain the data in the manual system, books, physical books. Okay, nowadays you need not to face that much of difficulty. Clear, everybody? Right. So records not destroyed. When records not destroyed, automatically you can see what is the stock as on the date of fire. Simply open the book and look at the date of fire. That means previous entry. It is nothing but previous entry, and you can see, okay, this much of stock lost. Actually, this much of stock should be available in the business, and this is lost. Simple as that. But the problem comes when records are also destroyed. Physical records are also destroyed. Then how can we calculate the value of goods lost? See, when the records are destroyed, it is nothing but it is equal to what? You are not maintaining any stock records. You are maintaining stock records, but these records are destroyed in the fire. That indicates what? That indicates that is equal to you are not maintaining any books of accounts. Yes or no? In that case, how do we assess the value of stock? Do you think in the examination problems they will give you the first scenario? First scenario is what? Books of accounts are maintained time to time properly, and these books of accounts are not destroyed. In that case, it is simple to us to calculate the value of goods lost. Yes or no? Don't expect this type of problems in the examination. So this assumption is not good in the examination problems. Then what we assume, sir? So we should assume that stock records maintained or not maintained, irrespective of that fact, we assume that these stock records are destroyed. These stock records are also destroyed. Okay, based on this assumption, we calculate, we estimate. The perfect word is it what? We estimate the value of stock as on the date of fire. Clear, everybody? So that calculation we try to understand. Okay, see calculation of value of stock as on the date of file. For that, here look at one example. See the timeline 1/4/2021 opening of books of accounts, and when the year closes 31st/3/2022 closing the books of accounts. So that what is our financial year? Financial year is 2021-22. Yes or no? Okay, fine. Now assume as on 31st August 2021, fire occurred in our business premises. Okay, right. Now we should calculate the stock on the date of fire. Yes or no? 31st August 2021. Okay, fine. Before that, you people tell me generally, as on the date of closing the books of accounts, we calculate closing stock. Did you remember? Yes. Now, whatever the procedure you follow, or whatever the way you follow to calculate closing stock on 31st March 2022, the same procedure follow on 31st August 2021 also. So now if you can calculate the closing stock on 31st August 2021, that is nothing but what? The stock as on the date of fire. Are you able to follow? Okay. Now we'll try to calculate closing stock. How to calculate closing stock? Okay. In CA foundation level, under the chapter of inventory valuation, we understood how to calculate closing stock. Yes or no? Yes. To calculate closing stock, we have different methods, two systems. One is perpetual system and another one is periodical inventory taking. Yes or no? Okay. Under perpetual, we have seen FIFO method, LIFO method, and weighted average method. Yes or no, students? Right. And under periodical method, physical verification of stock. Yes or no? Right. Here inventory taking we have seen, inventory taking, physical inventory counting. So we take the count of stock physically. Okay, right. This is the procedure we followed in inventory valuation chapter for calculation of closing stock. Okay, but this is direct way. This is direct way to calculate closing stock. Okay, but here what is happened? There are no books of accounts. Our assumption is books of accounts are destroyed, or where we are not maintaining the books of accounts. Now tell me, how do you calculate? For that, so direct method it is not possible. So that we should follow indirect way. Here, as an accountant, you should apply all your techniques, all your formulas. Okay, now we see. So we take indirect method. Here we should apply some formulas. Look at it. Generally, we have a formula for cost of goods sold. What is the formula for cost of goods sold? Opening stock plus net purchases plus direct expenses minus closing stock. Yes or no? Closing stock can be calculated in the above manner under inventory valuation chapter, but here it is not possible. So that bring this closing stock to the left hand side and cost of goods to the right hand side. Now look at, now what is the formula? Closing stock is equal to opening stock plus net purchases plus direct expense minus cost of goods sold. Okay, now here the problem comes, how to calculate cost of goods sold. Opening stock already from the previous books or from the previous financial year data, we can take the opening stock. And net purchases, we may ask our suppliers regarding our purchase details. At the same time, direct expenses. Okay, so this data we can mobilize. But what about this cost of goods sold? Okay, now again the question comes, how? right? So use your techniques, use your techniques. What is the technique here we can use? Look at gross profit. If you remember, gross profit is equal to net sales minus cost of goods sold. Did you remember this formula? Gross profit is equal to net sales minus cost of goods sold. Here what you need? Cost of goods sold, bring it to the left hand side. Cost of goods sold is equal to net sales minus gross profit. Minus gross profit. Here you can get the information of net sales. See, from our customers we may get these details, sales, okay, or from the books of accounts. I said nowadays we are maintaining books of accounts in a cloud system. Okay, cloud system, we can retrieve the data easily about the sales. Now you tell me, what about the gross profit? Again the problem comes here, gross profit. Gross profit. Okay, fine. Observe here, observe here. How can we calculate gross profit? So gross profit can be calculated net sales. What is the formula for gross profit? Net sales into GP ratio. We have this formula, GP ratio. Gross profit is equal to net sales into GP ratio. Okay, net sales we know anyway. What about GP ratio? Again the problem comes. Yes, for every problem we have a solution. Now GP ratio is equal to what is the formula? Gross profit divided by net sales. Gross profit divided by net sales into 100, and this GP ratio is not for the current year. This GP ratio is for the previous year. Previous year, based on previous year financial statements. Generally, a business can earn a standard or similar gross profit every year. Standard or similar gross profit every year. It is our assumption. Okay. So based on the previous year data, you can calculate this GP ratio, and the same GP ratio we apply for the current year data. So from this GP ratio, you can calculate gross profit. From this gross profit, you can calculate COGS. From this COGS, you can calculate closing stock. So this is the method, indirect method, which we should follow, for ascertaining or calculating closing stock. So this is formula based. Now the same formula we convert into a statement. Look at the same formula we convert into statement. Look at statement showing. Look at what is the heading here? Statement showing calculation of stock as on the date of file. Okay, so how we prepare the statement? Look at how we prepare the statement. Observe. The same formula we convert it into a statement format. That's it, students. The same formula we convert it into a statement format. How we convert? Okay, fine. Now look at it. So particulars, amount, right? First, what is there in the formula? Look at opening stock plus net purchases plus direct expenses, right? Now write down first opening stock. To this add net purchases net purchases and direct expenses. Direct expenses. Okay, add. Fine. Okay. Okay. Now, from this, what you have to deduct? What you have to deduct? Tell me. Cost of goods sold. See the formula? Cost of goods sold. Right. So, how cost of goods sold is calculated? Tell me. Cost of sales. We may call it as cost of sales or cost of goods sold. Okay. How do you calculate sales? Sales minus what you have to deduct? Gross profit. What you have to deduct? Gross profit. Yes or no? How do you calculate gross profit? Gross profit is nothing but sales, net sales into GP ratio. Net sales into GP ratio. Okay, fine. Over. Right. Now, whatever the amount you get, that is your value of closing stock or value of stock. Value of stock. So the same formula we converted into statement format. Okay, sometimes you can solve the examination problems by using the statement. Sometimes they ask the same statement, convert it into account. The same statement we convert into account. Which account? Trading account. I think you remember the trading account format. See, in the trading account also, we put the same information. Try to understand. Okay, visualize. Now what we do, the statement we are converting into account. The statement we are converting into account. Which account? Tell me. Trading account. Which account? Trading account. You may ask it out, sir. Actually, trading account is prepared. Actually, trading account is prepared only at the end of the year. Yes, but this trading account we are preparing as on what date? 31st August. That's why we call it as memorandum trading account. This is not actual trading account, but it looks like a trading account. That's it. Memorandum trading account. Okay, for the period. For the period. So what is the period here? From opening date of books of accounts, opening date of books of accounts to fire occurred date. Fire occurred date. So for this particular period of time, we are preparing this memorandum trading account. I hope you are following. I hope you are following. Now look at, draw the format, account format. See, formula we converted into statement, and the same statement now we are converting it into, tell me, account. That's it. Now we'll put the same information in this format. Now look at, first, opening stock. Simple. You know how to prepare trading account. So opening stock. Okay, fine. Opening stock. And 2, purchases. So if you get returns, okay, fine, returns. Otherwise, direct amount you can write down in the amount column. Right. Now, 2 direct expenses. Sometimes they may give you manufacturing expenses. Okay. After that, by sales. If you get any sales returns, then sales returns. Clear, everybody? And sometimes out of these goods, we may send goods on sale or return basis also. Okay, if you remember at the end of the year, whatever the goods lying with customers, those goods also belongs to us. Okay, now buy goods on sale or return if you have sent, because out of these purchases and opening stock, some goods are sent on sale or return basis. So you are writing on the credit side means what? You are reducing the cost of goods sold. Okay, fine. Right. Next, out of these goods, we may send some goods on consignment basis. Goods sent on consignment. Goods sent on consignment. These two we should mention at what price? Cost price. Don't forget. Okay. Now, actually, if you balance this account after writing closing stock, generally trading account is prepared like this. Yes, after writing all, what we get, the difference is nothing but either gross profit or gross loss. The difference is nothing but either gross profit or gross loss. But in this problem, trading gross profit is already calculated. Gross profit is calculated. How? Sales into GP ratio. Sales into GP ratio. So gross profit is calculated first. Normally in the trading account, gross profit is nothing but the difference in the account. But in this problem, it is because this is indirect way of calculating closing stock. So gross profit we write first. Okay. Now this closing stock will become the balancing figure now. This closing stock is prepared, the balancing figure now. So this is how we calculate closing stock, by preparing trading memorandum trading account. This is not only trading account, memorandum trading account. Look at, formula is converted into statement, the same statement is converted into account. So if you want to calculate closing stock in the examination problems, what is the information you should get? I hope you understood this concept till now. Now tell me, information. Which information you need to complete the problem? Which information you need? First, opening stock information. Opening stock information you need. Second, purchases information you need. Purchases. Let us assume our financial year is 2021 to 31/3/2022. On what date fire occurred? Fire occurred on 31st/8/2021. Now opening stock is on what date? 1/4/2021. Okay. Purchases from what period? 1/4/2021 to 31/8/2021. Between these dates, whatever the goods you have purchased, you should know the information. Okay. Third one, direct expenses. Whatever the expenses you have incurred between the same period to bring the goods, to purchase the goods, so you have to mention. And fourth information is what? Sales information. Sales also for the same period. So whatever the sales made during this period of 8 months, April, May, June, July, August, 6 months. 5 months. 5 months. So whatever the sales you made for this period of 5 months, you need that information also. Okay, fine. And what is the other information you need? Gross profit ratio. Gross profit ratio of previous year. So if you have this information, and another information is what? Goods sent on sale or return basis. This is optional information. This is optional for the same period. And next one, goods sent on consignment. This is also optional information. Basically you need these 5 things first. So if you have these 5 things, then it is easy to us to calculate closing stock. But you people tell me, in the examination problems, will they give like this? No. Okay. So that out of this information, in the examination problems, they miss some information or they ignore some information. So that you have to calculate. So what are the possibilities? First possibility, if GP ratio is not given. If GP ratio is not given, look at GP ratio. If GP ratio is not given, then what we do? What we do? Unless you calculate gross profit, the balancing figure closing stock cannot be ascertained. Yes or no? Yes. Now tell me, GP ratio is not given. So that what you have to do? Will you leave the problem and come? No. Calculate GP ratio. Calculate GP ratio as working note. Simple or not? GP ratio not given, then calculate. Acha, next question is what? Sir, to calculate GP ratio, we need some information. Obviously. Which information you need? For that, prepare. Which information you need? Previous year information. So along with current year information, if you have previous year data, then only you can calculate GP ratio. Yes or no? Right. For that, prepare trading account of previous year. Previous year. Not memorandum trading account. Directly trading account of previous year. Sir, by preparing trading account, you can calculate gross profit. By preparing trading account, you can prepare gross profit. After that, calculate GP ratio by applying the formula gross profit divided by net sales into 100. That's it. Now apply this GP ratio in the current problem. So this is what working note. This is what working note. All these things we should do in working note for calculation of GP ratio. After calculation of GP ratio, apply this GP ratio in the problem directly. Memorandum trading account directly. Hope you understood. Okay, GP ratio not given. This is one way of giving the problem. Second one. If you observe the above things are now out of this information and sales information. So opening stock, purchases and sales. So what he can do? Look at simple. They will give you certain adjustments. So adjustments per stock. So one way of twisting the problem is by not giving GP ratio. Another way of twisting the problem is adjustments for stock. Sir, what are the adjustments for stock, sir? There are so many adjustments for stock. So in the final accounts, when you have prepared final accounts of sole proprietorship in the CA foundation level, there we have seen so many adjustments for closing stock. Stock. What is that? Tell me. Stock is distributed as free samples. See, during this period of 5 months, we may distribute some stock as free samples. Next one. Stock is withdrawn by proprietor. During this period of 5 months, stock may be withdrawn by the proprietor. Accountant may not be recorded the entry. Yes or no? Next one. Over or under valuation of stock. So in the previous year, the stock may be overvalued or the stock may be undervalued. Yes or no? So next one. Out of the above stock, there may be some stock called slow moving items. Maybe see, in case of seasonal business, some goods may not be sold frequently. So these are slow moving items. Next one, some abnormal or defective items. The stock may contain slow moving items and abnormal or defective items. Sir, why should we? So in that case, the stock can be segregated or divided into normal goods and abnormal goods. Why, sir? Why? Because these slow moving items and abnormal or defective items cannot fetch same rate of GP. Same rate of GP, gross profit. See, normal goods can fetch the same or similar rate of gross profit, but slow moving items we may sell for less price. Defective items also we sell for less price. So these things cannot be fetched the same rate of GP, so that from the stock we should divide or differentiate this slow moving and abnormal items. I hope you are following. So these are the possibilities of twisting the problem. One, if direct information is given, then okay, anybody can solve the problem. But if direct information is not given, some information is missing. So what are the possibilities? First, GP ratio can be missed. In that case, do prepare working note. Okay, do working note, prepare trading account of previous year, calculate gross profit, from that calculate GP ratio, apply this GP ratio in the current problem. Okay, main problem, right? Second one is what? Abnormal items, adjustments for stock. What are the adjustments? So sometimes if they don't give these two, sometimes they may not give these two, but these three out of 3, 4, 5, sometimes they may give you. Clear, everybody? So in this situation, how do you solve the problem? So this is nothing but our insurance claims for loss of stock. This is the concept of insurance claims for loss of stock. So stock is lost due to fire. So we should request the insurance company by preparing insurance claim form. Okay, to prepare insurance claim form, you should know how much stock was destroyed. So for that purpose, first you should calculate the stock value as on the date of fire. For that, this is the procedure. I hope you have understood this concept. After watching this video, I hope all your doubts in insurance claims for loss of stock or gets clarified. Okay, students. So after this, next step is what? Solving problems. So these problems we solve in the next class. So if you have not subscribed my channel, subscribe my channel. If you like this video, share it, comment and like this video, and don't forget to click bell icon for updates. Bye bye, students.